Yeah, hello everybody. Thanks for having me here. And yeah, we are the last panel, but not least, and the best is yet to come, hopefully. So I'm really happy to moderate this panel with my fellow panelists. And before we start with exploring everything which comes beyond ETF approval of the SEC that we learned in our panel before, I would love to quickly ask my panelists to introduce themselves just with a few words. So perhaps you want to start.
Yes, thank you very much. So Dolf Diederichsen, I'm the co-founder and CEO of Hyphe. And with Hyphe, what we do is we offer banks, brokers, institutional clients that are regulated the opportunity to trade crypto and to offer crypto trading to their own clients. So we started the company already quite a long time ago and quite ancient by crypto standards. But we have recently got our BaFin license in Germany for our subsidiary, which enables us to also trade securities in the future. And that's, I think, will be very interesting to venture from crypto into tokenized securities.
Yes, hello everyone. Jan Beinke from Deutsche Börse Digital Exchange, so short DBDX. I'm a business developer and I'm helping our clients to get native exposure to cryptocurrencies and digital assets, and this is what we do. We want to pave the way for trusted access to cryptocurrencies.
Hello everyone, Artiona Bogo with Figment. Figment, for those of you who may not know us, are the world's leading provider of blockchain infrastructure. And we have more than 14 billion of assets under stake. Over 250 institutional clients rely on Figment to provide staking services, seamless integration, rewards reporting, data insights. And yeah, at Figment, I lead technical integrations globally, based out of Berlin, Germany. And yeah, happy to be here and looking forward to the conversation.
Good evening. My name is Justus Schleicher. I'm manager at Zanders, a originally Dutch risk management consultancy, now global, focusing mainly on treasury risk finance. So everything around the CFO and CRO is what we cater to. And I personally focus on digital assets, smart contracts, and everything blockchain.
Yes, good evening. Thank you very much for the intro. Last but not least, that's what they say, right? And my name is Alexander Thoma. I work for PostFinance. That's the largest retail bank in Switzerland by number of customers. We represent roughly 2.7 million clients. And we're offering custody and trading in native digital or cryptocurrencies and digital assets. So this is why I'm here, I guess.
Yeah, thank you everybody very much. When it comes to cryptocurrency trading, I mean, what are the biggest challenges, but also opportunities for financial institutions in terms of new products, regulation, and adoption in general?
Well, I can start. I can kick it off, right? Well, of course, we've seen in the last decade a very high rising price of Bitcoin and other crypto assets as well, right? So we have a nice price exposure on the one hand, but on the other hand, we saw a lot of exchanges going down, funds being stolen, smart contracts being hacked. So like there are quite some issues if you deal with cryptocurrencies, which you have to be aware of, and then have to figure out how to manage those risks, right? And if we just take a look what happened at FTX, a lot of managers, a lot of fund managers in Germany, in Europe, in the US, they lost quite a lot of funds. They didn't manage their risks well, right? They had certain amounts of fiat money, certain amounts of cryptocurrencies on an unregulated or not so in-depth regulated exchange. So they faced some major issues, right? Because they went bust. Those guys losing their assets really hurt them. And like this is a thing you really have to consider when trading cryptocurrencies, right? Because this is usually a pre-funded market if you want to trade cryptocurrencies in a native way.
Yeah, so we heard about a lot of risks here associated to crypto trading. So in return, I would like to ask somebody else. So what are the major opportunities here for financial institutions when we talk about cryptocurrencies trading? And perhaps also which products are we thinking of?
Yeah, I mean, I think there's just two main aspects that you can think about sort of when looking at cryptocurrencies in general and blockchain technology. And the first one is that there's a commercial opportunity in offering crypto trading. And for me, I think it's very clear that every bank in Europe that is offering gold or stocks or any other investment products will probably offer cryptocurrencies as well in the next 3 to 5 years. And that's just sort of, it's a question of regulation still in some markets, but with MiCA around the corner and banks getting ready, I think that's just a matter of time now. And that's something that is, looking at the very relatively short history of Bitcoin is actually quite amazing. And it's a great accomplishment to see. I mean, the fact that we have regulation is actually to be quite amazing if you think about this, that this technology started quite fresh. And then I think it's also the right gateway to sort of familiarize yourself with a product as a financial institution, and then participate in the ongoing path to tokenization of everything. And we 100% believe that more and more financial products will be traded on tokenized rails, and they will have their tokenized form. And the question is, like, how do you engage as an institution? And I think one way is to really get started with cryptocurrencies. I think the other way to just start digital projects and have it, sort of driven in some kind of innovation lab, that's helpful. But it's, it never gives you the same level of expertise as if you do it in production, live, as a money-making activity first, and then take these skills and capabilities and then adapt it to the entire organization.
Yeah, thank you for that. Next question would be, do you think that cryptocurrencies trading already influences treasury strategies? I mean, do we really see this kind of adoption from the financial institution side?
I can take that. Yeah, it's definitely having an influence on the Treasury Department, I would say. I would say the most common question is, what do we do with it, right? So, I mean, usually it's some department coming up with an idea, whether it be NFTs or trading, whatever. And then at some point, you need to pass legal, you need to pass Treasury, and you gotta formulate some way of taking care of it. I mean, most corporations and FIs, I would say, you just go the custodian route. Generally, I would say that's the move right now. Instantly swap back to fiat currency, use intermediaries where possible, and just detach yourself as much as possible from the process and the risk associated.
Okay, and now the next question I would really like to ask you, Artiona, because you're an expert in staking questions. And can you tell us a little bit about staking? I mean, what does it mean in terms of trading, and where the risk associated to staking, but also the chances and opportunities, and how is it used?
Yeah, I think this is really the right segue to discuss about staking after we spoke about the various options for firms, like be those asset managers or exchanges after they implement custody and offer custody support for cryptocurrencies. Then ultimately what follows next is staking, right? As whenever you have users, or even for your internal purposes, whenever you don't actually need liquidity, but you are going to hold, be that for years or maybe perhaps a few months, it makes sense then to stake the tokens, because otherwise they are sitting there idle and not doing any work for you, right? So taking one step back, staking is this process whereby tokens are put to work. And what I mean by putting tokens to work is that those are actually helping secure blockchain networks by being locked up in the original wallet. So all we do at Figment is non-custodial staking. Tokens actually never leave the original wallet, with the exception of ETH, whereby ETH is sent to the Beacon deposit contract. But even in that case, we could argue that it's still non-custodial, right? Because there is a way to get your ETH back to the withdrawal address. And as a consequence of this action, then the the users are rewarded with staking rewards. So staking is not an investment product. It's an inherent concept of the underlying blockchain itself, and something that, in my opinion, everyone should consider, whether you are, driving the digital asset strategy for Alex, for example, at Postbank, after providing, for example, cryptocurrency access to users. That should be an option for users to actually stake their tokens so that they can reap staking rewards in case those users are not interested in trading those tokens, right? So it's just, in my eyes, risk-free premium. Because yes, there are risks associated with staking, but that's why we exist, to take away the most of those risks and to do it in the right manner. Like I'm talking about slashing risk. These are inherent mechanisms that the protocols introduce to disincentivize validators from misbehaving. So namely, a validator attesting to the same block twice, or proposing twice within the same slot. So these are mechanisms that actually disincentivize validators from misbehaving. And so there is a built-in security, so to say, but you have to have the right configuration for that, and you have to have the right DevOps support and monitoring and all of that. So with a little bit of management, sometimes this little bit actually becomes quite material, because we're discussing about Figment, for example, runs 5% of the entire ETH network. We have thousands of ETH validators, and you have to do it right. As we know that there are perhaps other staking providers that are in the top 10 right now that got slashed, and that is not a nice thing to happen. That is actually the worst thing that could happen to a staking provider. But yeah, partnering with the right peers in the industry, it's almost risk-free premium for you and for your users. You can decide as an asset manager, as an exchange, you can decide what portion of those rewards you distribute back to users and what portion of those you actually put back to your treasury. So yeah, it's like another business line, almost like for free, I would say. So one of the most obvious use cases.
Okay, there's a direct response to it.
Yeah, I have a hard time saying risk-free premium, to be honest. I don't agree with that.
Welcome to Germany. I say that because we're Figment, right? So, and we know how to do it. But yeah.
Okay, that is actually my follow-up question. So what would happen if there is a slashing, me as an investor, right? So if there is a slashing, what are the measurements that you have in place as Figment?
Yeah, I agree with you. And of course, the reason why most institutional clients partner with us is because we are the most like them. Like we have a risk person talking to their risk person, like a head of risk and compliance. And so we have all the setup in place, starting with SOC to all the certifications, but also insurance and coverage, right? So we have on-chain coverage, we have off-chain coverage. We notify users in the event of being slashed. We've never been slashed ever since launching in 2018. So all the procedures are in place to reimburse the user, so to say, according to the coverage we have in place, yes.
Okay, then I agree a little bit more about the risk-free if there's insurance and...
Absolutely, yeah, absolutely.
Yeah, I told you that this would be a very lively discussion. Go for it.
Let me add to that, not all events are insured, so you have to be fair, right?
This depends on the policies of the staking provider. Like this varies from staking provider to staking provider. I mean, we would need to decide on a protocol by protocol basis. We typically provide coverage for all of these events. And sometimes in Solana, you don't even have slashing. So that is not even a topic in the first place, right? So it really, it is very nuanced from protocol to protocol, and we have to, discuss on a concrete case.
Okay, thank you so much. So we already see that apparently the term staking implies a lot of emotions, and I would like to know. I mean, when we talk in general about trading and cryptocurrency adoption for institutional players, we have to talk about regulation. And from your point of view, I mean, feel free to answer. Is there a difference in terms of adoption for German banks, for German institutional players, and let's say other countries like the US? Do you feel that in other countries the adoption takes place with higher speed because regulation is less strict?
Yeah, maybe let me take this one then. So we definitely see a difference in the speed of companies moving depending on regulation. And I think that's obviously, since it's a financial or closely to financial services related product, that's, I think, very obvious. And what we have seen, I think, in Europe is that specifically financial institutions in Germany and in Switzerland have been faster to adopt this. And I think the majority of that reason was regulation. So in Germany, for example, BaFin deemed cryptocurrencies to be a financial instrument very early on in the process, and trading of financial instruments is regulated, but also there's a very clear framework of how to trade financial instruments and what are the rules and regulation that you need to comply with. And then when the regulation around crypto custody was implemented, then there was a full framework for financial institutions in Germany to offer trading and storage of cryptocurrencies in a compliant way. And that's, I think, an opportunity that some players then started a little bit earlier on, and some other players are sort of probably a little bit behind still. But there was like a lot of activity in almost all banks sort of looking at this and seeing to how they could get to market. And I think if you look at other European countries where there was sort of this registration regime where you had to have a registration as a crypto asset service provider, that meant that financial institutions in those markets, in addition to their banking license or their investment firm license, they also had to get their local registration in place. And that is something that put an additional burden on these players. And while some have done it, not many have them, and it was sort of not something automatic that they would have in place, but it was a hurdle for sure. And we expect this to change when MiCA comes, and then there will be EU-wide regulation, and that's, I mean, if you sort of participated in some of the panels, I mean, there was probably not a single one where MiCA wasn't a topic, or at least mentioned once. And it would mean that you will have European regulations, so it's not a directive that will be turned into European law by each member state, but it will be a European regulation that's then defined, and once it's enforced, if you comply with that, you can also offer services under MiCA, and that will create this level European playing field that we've been waiting for a long time, and that will, I think, also kickstart many of the institutions offering services. So I think yes, the answer, quick answer, yes, regulation definitely has a very important role in shaping the industry and enabling services.
Yeah, thank you, Dolf. Alexander, you want to add something on that, because I saw you got the microphone.
Yeah. So my point of view is basically goes in the same direction. So it depends on the country you are. Switzerland, being at the forefront of these developments, has a very friendly regulation in place that lets banks directly offer this stuff. So, for instance, I give you an example. The ETF in the US for Swiss customers, it didn't really have a direct effect, to be honest, simply because it's not an investment instrument that's needed for us. I mean, you can buy directly Bitcoin. You don't need to buy an ETF and pay an extra 0.3%. So that means basically for the US or US people, it was very important because their banks don't offer it. But for instance, for Swiss people, it's just irrelevant. What was relevant though was of course, the short-term market reaction to it. If you're already invested, and mid to long term, the legitimacy that comes from the SEC granting an ETF in the US, and what that basically foreshadows for the rest of the market in the future.
That is really a very interesting point, that you think that for your customers based in Switzerland, it was not really a big deal that the SEC got the approval. However, at the same time, we all saw how much institutional money came into the market and the interest in general in Bitcoin ETFs. We just got the information that Hong Kong, for instance, just got, I think, the approval for further ETFs. DWS here in Germany, we heard reported earlier this day, also launched ETFs. So I think, yes, there is a huge demand, above all for institutional players who don't really feel ready to invest directly into cryptocurrencies. I mean, this is what we heard in the panel before. In general, when we talk about trading, we also have to talk about the different models of exchanges. So we know we have centralized exchanges in our old world, and now there are decentralized exchanges coming to the market. So which role do they play in trading adoption, if you like? So cryptocurrency trading adoption, I have to say.
Yeah, I would take this question. I think they play a very huge role, right? Because they offer something which hasn't been there before. And just to interact a bit with the guys sitting around here and still hanging around here after 6 p.m., which is quite nice. Like, how many of you did already use a DEX, so a decentralized exchange? So more than I expected, but I think I'm in the right place for this. And like, how many of you felt comfortable in doing so and thought like, wow, this is a really nice user interface and this is really user-friendly? Well, just for the audience, like nobody is. Oh, one. Yeah, you think it's super nice comfortable to do so, but yeah.
I mean, Uniswap got a lot better with version 3, but I yielded a lot of nice tokens in the airdrop, so thank God I used the bad user experience.
Yeah. No. I would agree regarding the airdrops, right? But I think the user interface is not something which can be easily handled by most people, and most people don't want to deal with DEXs, or like they don't feel comfortable in doing so, and at least not secure, right? Because you have to set up your MetaMask, i.e. you have to set up different things. You have to make sure that every transaction is signed correctly and so on. So you have to consider a lot of stuff when you interact with DEXs. And even then you might get scammed because you Google it and then you go to a DEX, right? Which is not the correct way to do, right? I don't recommend stuff like this, or you get scammed on X, which was Twitter before, right? So like there might happen quite some shady stuff, right? I think a lot of retailers are not aware when they interact, but I think those DEXs have a very, very unique value proposition on the other hand, right? Because they kind of make illiquid markets more liquid, right? Because you can trade any asset. If you want, you can just open a liquidity pool and make the market yourself. So this is a very nice tool, very interesting, but I think for a lot of people, they don't feel comfortable interacting, so and you have to manage a lot of your risk as well, right? But
maybe a small counter argument. Should, and I mean that not in a negative way, normies be trading in coins that you get on DEXs, right? So if you're limited or barriered by a MetaMask, you should probably not be dealing with Uniswap in the first place.
I agree, but what we see that, right? This is why I ask, right? We see a lot of people interacted with those DEXs, but they don't find it convenient, right?
True, yeah, the first transaction definitely is a blockbuster moment, yeah. True, agree.
Did you want to add something?
It will be the toughest challenge for us banks to bridge the gap between our world and the DeFi world in a regulated way. That's really that will be the hard challenge. I mean, Bitcoin trading is nothing compared to that one.
Absolutely. If you just go for the volume on Uniswap, right? I just looked it up yesterday. It was like, these are huge numbers, right? Which are being transacted there. So I think we can't ignore this volume, which is being traded on DEXs like Uniswap. But as you said correctly, we have to figure out how to do it in a compliant manner and to do it secure and not get tainted coins back, i.e., right? Like this will be a major thing.
And I think there's an opportunity for the likes of banks, who Alex is representing today, to actually onboard the next chunk of users who, from a demographic perspective, are not so inclined to interact with a Uniswap. Like if you'd pick someone in the street that has no idea of what Uniswap is, they would rather have, their Sparkasse online service offer them, like cryptocurrency or some type of exposure to the underlying assets, or even staking, right? Rather than doing it natively into this degen DEX exchanges, if you will. So I think there's a lot of responsibility from the institutional players like banks and the likes to onboard the next significant wave of users.
Yeah, you're definitely right. And in this context, I would like to ask you, so, I mean, on the one hand side, we are talking about staking for private investors, but I think where I am more interested in how are financial institutions already using staking for their own services. So I think you at Figment, most of your customers are financial institutions. So can you give us a little bit color here?
So we provide staking for all, be those retail users or institutional clients. And with institutional clients, I have in mind asset managers, very large asset managers that have cryptocurrency on their balance sheet and they're not doing much with it, but they want to actually reap extra rewards, like exchanges like crypto.com, blockchain.com, these exchanges that also offer wallets, and the custodians like the BitGos of this world, Fireblocks, Ledger, Anchorage, and others. Essentially, we have built the rails of staking to Figment so that people who are custodying with these custodians can just click a button and then have their assets staked, right? And from a rewards perspective, we can do the math. Like for Solana, you have a 7% APR. For ETH, right now it's between 3 and 4%. So just the extra staking rewards, and you put this on a 500 million balance sheet, we can all do the math. It's a super profitable line of business. Like these are rewards that are just flowing in from the protocol that you absolutely need to actually get your hands on. Otherwise, you're losing, you're leaving money on the table, right? So yeah, that's basically it. There are of course other strategies to making such profits, but yeah, like lending and borrowing. And I have to say that staking has gotten a little bit of bad reputation because in the past, also with the move of SEC towards Kraken, as some of these exchanges were actually calling it staking also when they used to do lending and borrowing activities. This is core protocol staking. This is just following the rules of the protocol and not engaging in lending and borrowing activities, which are often deemed as staking. That's, I think in the meanwhile, this has clarified itself and people are actually more used to the term staking from a protocol perspective. But yeah, so this is what we're seeing, and interestingly, across all of these cycles, whether it be like a bull cycle, bear cycle, I've seen that demand for staking has grown very steadily. So it's a kind of a good place to be if you are in a staking business, because at any time you see, users coming in and wanting to do business with you, and you're not suffering so much from this, the market noise, if you will. And as they are always the believers that want to hold long term and want to stake. So.
Yeah, thank you. You want to, somebody?
Quick follow-up question.
Yeah, for sure.
Not sure if
I like your follow-up questions.
Not sure if you're able to share, but could you put a percentage split retail and institutions concerning staking?
So right now, the majority of our 14 billion assets which are staked are coming from foundations. You can think of all of the big foundations, asset managers. So it's probably, let's say, a 70-30% split. But we also have like a dashboard where any kind of retail user with a MetaMask can come in and they can just plug in their wallet and then stake with us.
But I have to jump in here in terms of adoption. So which countries are the most actively using staking for the businesses? So because I guess it's not really Germany, right?
Yeah, since we're in Germany, call out to all the, but maybe I should call out Buffin, and I actually had a good conversation with Buffin today. I'm not sure why is that, or maybe I am sure, it's just the Germany's approach and being very risk averse. And I think FINMA, for example, has done, in my eyes, a very good job in partnering with all of the Swiss banks, the Swiss players, and FINMA is in the meanwhile asking very sophisticated questions around staking, and they also changed their stance back from December last year, which was a little bit problematic. Not Germany, but anywhere else, be that Europe, the US, APAC is growing a lot of asset managers out of Singapore, China, Japan, Hong Kong are staking with us as well. So yeah.
Thank you. Dolf, you want to add something, I guess?
Yeah, I mean, we're a bit outside of the staking realm because we're basically, we're doing the trading and getting the best price for customers at all times and adhering to best execution and making sure that we win every trade. It's quite a different business from looking after coins in custody or sort of trying to earn staking rewards in protocols. And I think, players should focus on what they do best. And I think it's, I think there's a bit of like sort of the forefront of innovation out there where people are driving new projects, interesting ideas, and sort of living on the forefront and also taking big risks. And that's, I think, fine, and it's good that we have that. And then I think there's like another share of the market which is much larger, which is subject to regulation that obviously needs to be more careful and needs to sort of also protect interests of users and ensure things. And I think that's, if there's a healthy balance between those two, that's not a bad thing. And we're obviously more in the regulated space.
You wanted to add something, I think?
Yeah, so maybe for those who don't know regarding staking, maybe you can shed some light on the business side. So you, of course, you earn on the rewards also, right? You take a cut, and a lot of your clients are institutional clients, but it's a B2B2C business. So in the end, the clients of your institutional clients are also retail customers. So then it's a chain, it's a value chain, and everyone takes out a cut of the reward, and in the end, maybe roughly 80% of the reward lands with the end client, and 20% is split between you plus the institutional client, and maybe there's even a third party involved. So that's currently the ongoing regime, right? But on the other hand, it's a very technical process that has a lot of upfront knowledge needed. So the case is fully there that there's a partner needed that takes away the technical difficulties. So I think it's a very good business.
Yeah, best speech ever. Now just do it, Alex.
Yeah,
implement it.
I think we are running out of time a little bit, right? No? Oh, yeah. 3 minutes to go. So it's perhaps time for closing remarks after a very long day. And I would like to ask you the following question. So imagine we all going to meet here next year again. What will be the big topic we are going to discuss here in terms of institutional adoption?
Okay, you're all gonna probably say something positive. I'm gonna poop the party, so I'm gonna say something negative.
Okay, go for it.
Okay, so the SEC has ruled all currencies except Bitcoin as a security.
Okay, that's a statement. Yeah. Okay, right. Mm-hmm.
We're really looking forward to start our security trading business, and whatever the world will be, I think it will be, and that's sort of that. I think the most amazing thing is there will be another conference, and we will be sitting here and we will be talking cryptocurrencies, and we have been for the remaining years and or for the last years. And that's, I think that if you think about it, that this idea sort of brings so many people together, whether the markets are up or down. And it just doesn't go away, which is still fascinating for me, being 10 years in the space.
Okay, cool.
Well, cryptocurrencies are here to stay. I think this is things first said, right? But second, I think the major topic will be tokenization of assets, especially securities. I think we're on the same page there, Dolf.
Yeah, I totally agree. Artiona?
Next year we'll be here and we'll celebrate with Jan and Alex, the launch of staking on the Deutsche Börse digital exchange and Postbank's interface so that anyone can stake and you can democratize staking rewards for your users. It seems a very feasible goal to me, like, let's do it.
That's very good.
Well, in 1 year's time, my hope would be that we talk more about gateways into the blockchain and the traditional world. I think that's what we're lacking the most right now, is actual gateways and roads to drive on, if you will. I mean, looking at Swift and what Chainlink is doing, that's definitely promising and might be the, well, adoption kickstart if we have well-known traditional routes into the new world. I hope that we talk about that.
Yeah, I think the closing remarks were quite promising, and I think this is the most important message. So for sure, we're going to meet all again here next year, and for sure, we will then see how the institutional adoption, above all here in Germany and Europe, took place, and we're going to discuss it and see where the markets will go in the future. And yeah, it's a promising future for all of us here. And yeah, thanks so much for having us. And yeah, we are really good in time now. Thank you so much.